Limitation on itemized deductions. Prior to 2018, there was a limitation on the overall itemized deductions that you were allowed to take for higher income taxpayers. This was called the PEAS limitation. This limitation, though, was suspended for the years 2018 through 2025, but it's scheduled to come back under the old law starting in 2026. So it was a gradual reduction as your income increased. It got over certain threshold amounts. You had to reduce your overall itemized deductions, and it could actually eliminate as much as 80% of the itemized deductions of high income taxpayers. So you could only have 20% potentially of your total itemized deductions that you are actually allowed to take. Well, that particular limitation is being repealed with this new law, and it is being replaced with a new limitation that will be effective in 2026. What is that new limitation, you ask? Well, I'm glad you asked. So, effective in 2026, itemized deductions will begin to be phased out once taxable income reaches the 37% tax bracket. So remember, 37% bracket is the highest tax bracket. So once you reach the bottom number, taxable income number of that 37% tax bracket, of course, that bottom number is going to change every year with inflation. But once you reach that bottom number and you get over that bottom number, your total itemized deductions are going to start to phase out. The phase out amount is 2/37 of the lesser of your total itemized deductions, or the amount that your taxable income exceeds the beginning of the 37% tax bracket. And we're going to look at an example here in a minute so you can see how this works. The phase out amount is calculated after any other limitations are imposed, such as the state and local tax limitation, the limitation on medical expenses, etc. So several of the expenses, there's already limitations. Well, you have to do those limitations first, figure out, okay, what are my total itemized deductions that I'm allowed to deduct? Then you apply this further limitation. If you are taking the qualified business income deduction, which we'll be talking about a little bit later in the business section, you do not have to include this phase out amount for purposes of calculating the QBID. So the QBID can be limited based on your taxable income. But when you are figuring out your taxable income for purposes of the QBID, you do not have to include this phase out of the itemized deductions. So let's look at an example of how this phase out works. In 2026, Dennis's taxable income is $80,000 above the beginning of the 37% tax bracket. His total itemized deductions are $60,000. So his itemized deductions must be reduced by the lesser of 2/37 of $60,000, which is $3,243, or 2/37 of $80,000, which is the amount that his income exceeds the beginning of the 37% tax bracket. That amount is calculated as $4,324. Therefore, his deductible itemized deductions are $60,000 minus $3,243 because it is the lesser of these two. So $60,000 minus the $3,243. His itemized deductions on his tax return will now be $56,757. Now, of course, when you're actually doing this for your clients, you don't have to compute both of these amounts because you're going to take 2/37 of the smaller. So once you know that, oh, okay, my itemized deductions are lower than the amount my income exceeds the lowest part of the 37% tax bracket, you know that it's going to be the $60,000 that you multiply it by. And so you just do that calculation. But I wanted to show you both calculations just so you can see how it works. And that, my friends, is going to do it. Thank you for joining me. And if you have any questions, leave them in the comments. In the meantime, have a great day, and I will see you in the next one.